Welcome to the REI Foundation podcast, where we cover all the steps and strategies to make your real estate dreams a reality. Now your hosts, Jason and Pili.
So do you fix and flip houses or invest in real estate or just want to get started doing so? Well, Alpha Funding has you covered with fast, flexible, and reliable service and rates starting as low as 8.99%. Fast closings, no tax documentation or bank statements required, no prepayment penalties, seasoning, or minimum draw requirements. Alpha Funding, the softer side of hard money. To get yourself pre-approved today, go to alphafunding.com or call 732-657-2014. Well, hello again, and welcome to another edition of the Real Estate Investing Foundation podcast with Jason and Pili. Pili is out there making it happen with real estate and the kiddos today, but you are in good hands. Jason is here, and he's got an absolutely great guest for you, Aaron Fragnito. Welcome, Aaron. How are you?
Hey, Jason. Doing great. Thanks for having me. I'm proud to be here on your podcast.
Awesome. Well, thanks so much for joining us. And here's a little bit more about Aaron. Aaron is the co-founder of People's Capital Group, host of New Jersey Real Estate Network, a licensed NJ realtor, and a full-time real estate investor. Aaron's completed over 250 real estate transactions, totaling more than $35 million in real estate in his career. People's Capital Group works with qualified investors to create passive returns through local commercial real estate. And the owners of PCG, People's Capital Group, are experienced in locating discounted apartment buildings for sale in northern New Jersey and implementing a value-add strategy to create max returns for their silent investors. So for Aaron, this is great to have you. And we actually met speaking on a panel, and it was awesome to have you come on the show. Talk to us. How did you first get started in real estate, and what was the deciding factor? You said, okay, this is where I'm going.
Well, I read Rich Dad, Poor Dad when I was graduating college. I went to Rowan University. I graduated as an entrepreneur major, which is a really fun major, but it left it quite open-ended. Like, hey, here's how you start a business. Now go do it. So I read Rich Dad, Poor Dad, changed my life. At the time, I had moved out to Colorado to be a ski instructor and live with my friends for 6 months and kind of figure out what I wanted to do the rest of my life. And made a list. I said, okay, first I got to learn the industry, make some money, make connections. My goal is to own income properties and be a millionaire through real estate. And I made my strategy plan over a 10-year period. And I was about 22 then. I'm about 32 now. And it was first get licensed, right? Because I didn't know anything about the business and I had $0. So by getting licensed, I made some money in commissions. I learned the business. I learned how a transaction works, what investors do right, what investors do wrong, more importantly. And I met my business partner that I still work with today. And, we worked very well. He was putting in a bunch of offers and no other realtors would take his offers. Seth Martinez, my business partner. And I was like, nah, I don't mind submitting lowball offers. That's like the art of getting a good deal. Other realtors are embarrassed to submit lowball offers. I'm like, I don't care. I'm a realtor. I'm working for the buyer. That's in his best interest. So we connected there. We bought a 6-family together, bought it, renovated it, refinanced our money back out, and did that time and time again, and built our business to where we are today.
Wow. So I got a couple questions that I want to jump into. It. We don't spend too much time. I want to jump in more into the apartment stuff. But do you think people are starting out and need to get their real estate license?
I think it's the easiest dollar I've made in real estate is being a listing agent. So if you want to make money and get your feet wet and get a license, get a title behind you, right? Because if you start, you're like, oh, I'm a wholesaler. Like, what is that exactly? But I'm a licensed realtor with Remax. People, whatever, Keller, you have a big name behind you, or it doesn't matter. You're just with a broker. You're a licensed realtor, and that gives you all of a sudden a title when you don't have one. And I started making some money doing it. If you do it right and you hustle hard, it's a 7-day-a-week job. But I made 6 figures as an agent. It just wasn't my passion, I'd say.
As an investor, it seems so many of them, I can't find an agent. Well, a lot of them are doing it wrong. What would be some good ways that you can work well with an agent, especially if you're not going to be putting in, of course, a retail price?
Sure. Well, probably want to work with an agent who's an investor himself or herself, or at least really understands, in real estate investing. You really can't be working with a retail agent who doesn't understand the process of being an investor. So I find it's best to work with realtors that also own income property and own real estate themselves. Because when you are an owner of real estate, you look at real estate through a different lens. You look at it and what the costs are, all right? Not so much like what you recognize the gross operating income. But when I look at a flip now, I recognize the risks and the red flags. I don't of dollar signs in my eyes, right? Like, so I think a investor realtor has to really, unfortunately, put his commission second, right? And focus on the benefits of his client and understand what a good deal is, what a bad deal is, and not be afraid to submit a low offer.
Why do more real estate agents not invest themselves? It seems like they have all the information right in front of them. What are some of the things that keep them on the sideline?
That's a great question, Jason. I really don't know.
Yeah.
I don't know the answer to that. I find a lot of realtors that, let's just say, I'm not too impressed with, and I just feel like they could do a lot more. A lot of people get a realtor's license on the side, or they really are not entrepreneurial minded and really more of a employee minded, which is fine. A lot of people like doing kind of the same thing every day, and if it works, and they keep doing it. But this most successful agents and brokers are very entrepreneurial minded and roll with the opportunities and the different market conditions. But I think when you're a realtor, you're not taught to be an investor. You're taught to work for someone else, drive them around, hang your license under a broker. And to be a successful real estate investor, you really have to be a leader and a business owner.
Well, that's great information. But let's talk more about you and your business. Now, you started with the 6-family with your partner now. How has your business grown, and what are you currently working on today?
So we started with the original business plan was to get 100 units in 1,000 units in 3 years. Okay, 1,000 units in 3 years. We got to 100 units in 3 years by the buy, renovate, refinance, repeat. They call it BRRR on bigger pockets. Yep. So we got very quickly to 100 units. Developed our own management company, fired one that was stealing from us, and developed our own. And then realized about 40% of our holdings weren't making cash flow. So we recently sold about 40% of those. And that's our, all through that, we flipped about 40 houses, fix and flip. Okay. And that's a difficult part of the business. So in the last 2 years, we consciously decided to stop fixing and flipping houses. I think we've one going on right now where we just refinance actually out of it. We just hold on to everything right now. It's just a hard part of the business. Construction is a very precarious, unpredictable part of the business, as you know, and we want to kind of remove that from our model. So that's what we've been doing recently, and we just do syndications now. We raise capital and buy apartment buildings on a bigger scale, Class C and Class B apartment buildings, and we wholesale. So we'll sign contracts, and instead of actually putting up the money and doing all the work to fix it up, we'll put it under contract, sign it to an investor. Maybe we'll make 5, 10, 20 in the middle, a little less than a fix and flip perhaps, but it's a faster nickel,
So this is great. I honestly, we have so much to cover here, but if you look back now and you did all these flips and do you think if you had the same knowledge you had today, would you go back and do that again? Was the life lessons so valuable in what you've done?
It's hard to say. I learned so much from it. It got me here to where I am. If I could go back, I would have never fixed and flipped a house. I would have done 2 things. I just simply assign the contracts, have an awesome wholesaling company that brings in opportunities, and then cherry pick the best wholesale opportunities that meet the type of portfolio you're looking to build, and buy those properties by raising capital using other people's money. That's really the best business model, in my opinion. I'm not a great construction guy. I don't know a lot about it. My partner more handles that in the business, but even he's more of a property manager, more on the commercial side of the business. We're not construction guys. If I had a business partner that was a general contractor and that was our specialty, I'd say, yeah, let's fix and flip all day long. But if you're not a construction guy, fix and flipping really isn't for you. You got to recognize that.
So you had such a good success building up this portfolio, right? And you get to 100 units. The lessons about the 40% of the units that weren't cash flowing, what was the components there that led you to understand that? And what are you doing for the other assets that are allowing them to cash flow going forward?
Well, we bought a lot of Class D real estate, D as in dog. So we definitely, the lowest rung of real estate on the 4-letter scale essentially is D. So that, we learned there. There's nothing wrong with that part of real estate, but it's a hard property to manage. The type of tenancy can be very frustrating, and really the amount of time and resources you end up putting into the property and fixing up the unit from the high turnover. You might have a tenant there for a year, 6 months, 1 month, so it's very high turnover with lower quality real estate. So we've realized that all of our Class D holdings we sold. Anything Class C, we're kind of trying to move up to Class B or just hold as a nice Class C. And going forward, we're buying C plus and making it into a B, basically.
That's awesome. And looking at your property management company, what are some of the main keys to doing this successfully?
Well, the management company is everything. You know, our model is very local specific. We only buy within an hour of our office here just so we can maintain control of the asset, manage it completely. You know, everyone has different models and maybe one day we'll grow out to different markets. But for now, we've had a rough experience going far from home here and trusting other management companies. And we just really developed an excellent system here. Plus, we can find the deals. Because I have the local wholesaling company, I can find the deals. So most of the reasons people don't invest locally in North Jersey is because they say, how the heck do you find a discounted apartment building in North Jersey? And it's really tough. But if we can manage to do that, then for the time being, that's where we want to keep moving capital into. Yeah.
What's some of the tricks with mailing or marketing to multifamily properties? Traditionally, most people are doing a single family approach. How are you having that success with the multifamily?
Well, we do a lot of direct mail to out-of-state owners, worn-out landlords, older demographics. We find a lot of mom-and-pop owners that just can't walk up the steps anymore and manage the real estate. It might be in good shape physically. They may have maintained it well, but management-wise, where the rents are, there's a lot of work, improvement to be done. Just the amenities overall, just the collection of rents tends to be pretty far off, as you know with your business as well. So we find those mom-and-pop owners. We do less than $5 million. Our sweet spot's around $2 million, in fact. So because of that, we're not really playing against the hedge funds or these huge institutions that are buying 10, 20, $100 million assets. That's a really different arena. We're right around 500,000 to 2.5 million. And you're talking then to a mom and pop, an owner who, you're one-on-one with them. We often can connect right with the owner because of our direct mailing. So we're not going through a broker. That saves us not only a commission, but it allows us to negotiate better terms generally. But direct mail is our best source. Yeah.
Awesome. And you've been syndicating these deals going forward. We hear it constantly at the meetup, so I want to get into syndication, but I don't know how to raise money, or I don't know how to talk to people. We met at a meetup and, we were speaking on a panel, as was said there, and you were talking about how you also have been speaking on a lot of meetups and some of the key things that you've been learning about how to find investors who are looking for these type of investments. You mind sharing that thought?
Sure. Well, yeah, like we were saying earlier, I speak at a lot of RIAs. I probably speak once or twice a week in front of a group of 50 to 150 people at a RIA, Real Estate Investment Association. I have my own RIA, about 3,000 members. The problem is, if you're really looking for passive investors like we are, who aren't looking to, flip the houses or make crazy returns on their money, double their money, then you really aren't going to find them so much at RIAs. People at RIAs are looking to actively operate real estate generally, learn how to improve their own business, whether it's fix and flips or syndications. And then on top of that, they tend to be looking to raise capital, right? So they don't have the capital. So there are diamonds in the rough. I have found people at RIAs. I've found 7-figure investors at RIAs, but the best way to raise capital is to get in front of people who don't share your skill set, right? Who can't replicate what you do necessarily. A doctor, an accountant, an attorney, just a businessman or woman who's busy, 50 hours a week making high W-2 earnings, and they get a $250,000 a year salary. They get nailed on taxes. They can invest in one of my properties and get tax depreciation, passive cash flow checks in the mail. They don't have to do anything. So you got to find people that are not in the real estate industry and are high earners, and get nailed on taxes, because, or at least what we structure is a way they can avoid those taxes. But people who aren't doing what you're doing value what you do more. Therefore, they'll see the value in the investment and be more likely to do it.
So Alpha Funding Solutions offers creative financing tailored to your individual needs. Whether you're fixing and flipping distressed properties or building ground-up construction, Alpha offers flexible financing to get the job done. With no minimum draw requirements, no prepay penalties, and no seasoning requirements, borrowers can create a construction loan that best suits their individual needs. Everything at Alpha is done in-house, from the sales force to underwriting, construction management, and draw payouts. The team at Alpha works as a unit to best serve their happy family of over 1,000 borrowers. Experience the Alpha difference today. Visit www.alphafunding.com or call 732-657-2014. Again, that's alphafunding.com, and the number is 732-657-2014. There's nothing to lose and everything to gain. Alpha Funding Solutions, the softer side of hard money.
Investment and be more likely to do it.
So what are some of the main conversation, I'm not going to call them hacks, but points that you like to have on an initial conversation with an investor? First talk, and you're just trying to understand them. What are some points you're going to focus on?
In my experience, the most success I've had is with just talking about the relationship. What we do, actually my mistakes I've made, people love to hear about. My failures are very fun stories in the fix and flip business. Even buying 100 units and 40 of them not cash flowing is a fun story, but there's equity in there, there's growth. So, you want to build yourself first, what you do, why you do what you do, why you're good at it, how you know what you're doing, you've made your mistakes, and then how you're going to grow your business and why you need their help. I really try not to talk about ROI, even investment levels and things like that. That conversation tends to come later. People do have those questions up front. I will answer them as I can according to the SEC, but at the end of the day, people don't normally invest so much for an ROI, or they invest more in you. They have to like you, they want you. My main investors that have been investing in me for years, I send them fancy spreadsheets and in-depth offering memorandums. I don't even think they open them half the time. They just say, Aaron, is it a good investment? Am I going to make what I've been making? Okay, where do I sign? And I say, I put so much work into this offering memorandum. Please read it.
Yep. I know the same thing. Sometimes I'm like, did you guys even open this up? Any questions? Come back, have a question. I'm ready. I want a question. Well, on the opposite side, where are some of the things that investors who are raising capital, where do they go wrong? What are some of the things that they should avoid going forward when they're raising capital?
Well, I do this too. You talk about the property, or you talk about the return first, something like that. And like I said, you really got to build yourself first, what your company first, your integrity. So it's hard to do because people tend to want to know addresses, numbers, strategy. And you can, but talk more about the reposition strategy. Talk more about, how you found deals like that and the success you've had in the past. You want to talk about past, really, your track record. But don't make the mistake of just going up in front of a group of people and saying, hey, here's 123 Main Street and here's the return. You really got to preface it. That might be your ending thing. Okay. And after that explanation of all we do, by the way, here's our newest project. If you want to learn more, contact.
So if there's a new investor who's maybe they've had success in other things, how do they get over that lack of a track record? What are some keys?
Well, that is very hard. You really need to team up with someone that probably knows what they're doing. I gotta say, as someone who also invests my capital, I would not invest in a new real estate investor. It's just too risky. So you really have to team up with someone who knows what they're doing, has the track record. We've done stuff like that where individuals will introduce us to people that have the capital to invest, but just say, listen, you're brand new, you don't know what you're doing. I just don't trust, that this property's gonna work. But here's these guys, they can introduce us to the investor and say, but here's this company that does know what they're doing and they have a good track record. And you can team up with them in that sense. And we've done it where we'll give them equity in the building for introducing us to an investor. And then the individual who introduces that investor now has a track record. They own part of a successful real estate reposition, real estate syndication. They can talk about the building. We might be doing all the work and repositioning it and paying out the returns to investors, but the individual who brought the investor in owns a piece of that building and can use that building to brag about now. And not only do they get returns from that building, but it's going to help build their experience. So.
Yeah, well, that's great. I mean, honestly, having a team member come on board that may be able to fill that void, whether, it's in the opportunity for underwriting, if you don't fully have the clarity with underwriting or you don't have the track record. So putting the right team around you, I mean, you couldn't be more spot on. In your business right now, what's something you're working on to improve currently in your business?
Well, we're definitely improving our fundraising branding. It's a constant challenge to keep up with social media branding and things like that. In the last 3 months, I've hired some very good social media branding companies, data companies that tell me what's the best way to get people to my website, to what's the best way to attract the people I want to be attracted, right? So I think in the past, our marketing attracted maybe the wrong type of customer. We run a wholesale business, so we tend to attract very active investors. Now we're trying to also attract passive investors more than ever as we build our syndication business. And so as we do that, we've hired new data companies, new social media branding companies. We've stopped doing other forms of marketing that wasn't working, like pay per click and SEO. We hired some SEO company that was terrible, got rid of them, just really improving our partnerships, I think, with other companies that do our branding and marketing.
What are some of the key points to track in terms of your branding or your marketing?
Well, you have to figure out why people are coming to your site, where they're coming from, if that's the case, or your direct mailing, what pieces are working, what lists are working. You have to keep track of all these things. We have billboards. We try to track who calls in on the billboard versus who calls in on a letter. One thing we figured out was that the billboards don't work. They weren't great sources of income. We spent about $40,000 on billboards. We got one deal where we made about 60 on it. We got a really good deal out of it, but then we bought like 4 more, but they didn't pan out, So you never know with marketing. Sometimes you just have to try stuff and throw them out on the wall to see what sticks. Yeah.
So we've done. You cover so much here. We've jumped around a bit, but you've just done so much. It's great to touch on all these topics. Before we let you go, I want to, of course, touch on you've grown your real estate network, your meetup to over 3,000 people. How has that been beneficial in your real estate business, and how can another person go out there and create a successful real estate network?
Sure. Well, I mean, my RIA has been everything, that's really been great. Here it is, New Jersey Real Estate Network. That's one of our banners there. So yeah, we have about over 3,000 members in it. We do monthly meetups here in the office. We do IRA meetups here. We do webinars twice a month. Meetup.com has been really good. I think I pay them maybe $30 a quarter or something like that. And it's been a site that just kind of builds itself. So you can go on meetup.com and create the site there. There's a lot of real estate activity, a lot of real estate professionals on meetup.com. That's been good for me. And then I go out to other RIAs and I speak at other RIAs and I talk about my RIA, even opportunities like this. Every chance I get to build my brand, I do. I'm going to a lot of Rotary clubs these days, just kind of reaching out to new people in new areas, locally as well. But my RIA has been a godsend. Most of my capital I've raised and has been through my RIA. It's important to be a thought leader. It's important to be an educator. These days, people need to be educated first before they invest in anything, and they have to like you as well. But to get there, you need to be a thought leader and to put on seminars, know what you're talking about, have the experience, or bring thought leaders into the room properly. So it's not that hard to start a RIA. You just have to do it consistently, have the events, bring value to the events, but understand that you're going to need to consistently market it out. And about 70% of the people that show up won't show up again. It's just unfortunately part of the business where maybe they'll show up 2 or 3 times, but to keep the room filled, you have to bring in new people consistently.
Yeah, I love this. And for everybody listen, you see Aaron is just active. He's out there getting it done. So if you're going to find an excuse to do it, well, look what Aaron's doing. He's got so many different components working. And the key to it is that when he finds something that doesn't work or doesn't exactly work how he's looking for, he adjusts. He's not afraid to pivot and adjust. He goes from, flipping to just wholesaling and flipping to just, buy and hold. Or in the buy and hold, he finds the units, and then for that point, the units aren't working how he likes them for his portfolio. As he adjusts to his new portfolio. So be active, go out there. There's so many different ways you can get in this business. There's no one, step process for everybody. And look at how he's doing it in New Jersey, a market where so many people we hear constantly, you can't do it. You can't do it here in New Jersey. Well, yes, you can. If you want to do it, you will do it. And looking at that, Aaron, what's your next 5 years look like in this business?
So we do want to build our portfolio up to 65 million over the next 5 years. Seth and I always talk about our 5-year plan. We have an actual 5-year plan written down, which if you're a business owner, you should have that. Even if you yourself and Irene sitting, there in your own home office, you should have a 5-year plan written down. And 65 million next 5 years. We need to raise a certain amount of capital to get there. We're going to try to buy $5 million. $1 to $5 million apartment buildings within an hour of our office here in New Jersey. Perhaps we'll branch out to new markets in the next 5 years, but for now, we would like to build a 65 million portfolio within an hour of our office.
Do you have some words you live by or a company motto?
Well, I do have 10 rules hanging on my wall back over here that I write down, and some of those rules are like, don't be afraid to say no. No makes you more than yes. That's important in this business, whether it's a wholesale deal you're looking at, an investor that might be unethical, which I've dealt with. Sometimes saying no makes you more than saying yes. And just other lessons on construction and deal with contractors. Yeah.
Good. Guidelines are important. And if there's an investor who is looking to start out today, you gave some just really great advice, but if there was one thing they should do right now to get themselves off the couch or, out doing something, what should that action step be?
Well, my first step was writing down the plan, the 10-year plan. Okay. And I wanted to have $1 million of net worth in 10 years. I was 22 and, I just about got there. So that, the good news is, we wanted that plan, but it's not always going to happen exactly as you thought. But I wrote down the plan. There was about 15 steps to it and just tried my best to actually execute it and not give up. I mean, there were so many times I wanted to give up as a realtor. I got started in 2010 and no one was buying a house. You would put a listing up on the market at a really good price with the best damn pictures and no one would call you and no one would buy it. And it was so hard to make a buck. I made $500 in my first 6 months of real estate. I was broke. So, you got to stick with it. I didn't do everything right. Definitely don't do everything I did, but it's such an easy market now to be a realtor, to sell a house or to even wholesale. People are investing now, houses are selling, unemployment's low, GDP is, there's no excuse not to get out there and make money in this good market. If you learn how to make money in a bad market, it gets easier in a good market.
That's awesome. Well, you definitely represent just someone who just continues to go after it. You had your plan in place and you didn't let that first couple months stop you. So good for you. And for everybody listening, thanks so much for coming on the show today. What's the best way they can find out more about you, your company? Where's the best place to reach you?
Sure. So you can check out peoplescapitalgroup.com. Okay. peoplescapitalgroup.com. Call our office at 908-464-0400 and, or join our meetup group, New Jersey Real Estate Network on meetup.com. We have an event on the June 11th. I'm not sure when it's coming out. We have every second Tuesday of the month. We have an event here at our office in Berkeley Heights. So you can learn more at peoplescapitalgroup.com about that.
Awesome. Well, Aaron, thank you so much for coming on the show. This was awesome.
Thanks a lot, Jason. I had a great time. I'll come back anytime you want.
Perfect. We'd love to have you back. And for everyone listening, thank you so much for listening. And if you like what you hear today, which you definitely will with all this actual information, please go to iTunes, give us a 5-star rating and review. And if you're listening to us on iTunes or iHeartRadio or wherever you are, make sure to go to YouTube. You can see the video there as well. Again, this is Jason with the Real Estate Investing Foundation podcast. Thank you to all the listeners. Thank you to Aaron Fragnito. Have a great day. Bye now.
Thanks, Jason.
Thanks for tuning into the REI Foundation podcast. Check back next time for more awesome tips and strategies to launch your new you in real estate.